Morning, Steve here in Chicago with the morning grain comments. Well, over the weekend, central part of the Midwest missed out on some of the rains, and this next 2 weeks forecast looks like it's going to be below normal precip and maybe temperatures near to above normal. For the late crops, corn and beans in the east, I think this is going to help them grow out of some of their earlier problems. The USDA is expected to show crop improvements tonight of maybe 1 to 2% in the corn and bean crop, and winter wheat harvest is about 50% done. The extended models continue to talk about two things. Number one, a tropical depression coming into the Gulf later this week and bringing showers into the south and maybe south central part of the Midwest. And then this ridge is supposed to retrogress back west and allow normal rains to move into the Midwest later in July. So I think overall that's a pretty good forecast for the month of July. The key then will be what happens in August and September, because really for half of the crop, this is more like the month of June than it is the month of July. Overnight prices are up about a penny in beans, 3 cents in corn, and 2 cents in wheat, backing off a little bit from the highs overnight. And I think some people feel that we're still having problems on the demand side, especially on the export side, with competition from South America, and also eventually competition from Russia in the wheat front. No new news as far as the trade talks concerned between U.S. and China. They will have some telephone conference calls this week, but early stipulations and conditions by the Chinese before the starts talk suggests that there may be a low chance of a deal soon. There was rumors last week that China might come in and buy U.S. corn, beans, and pork as goodwill gesture before the trade talks start, but we haven't really seen any of that. Certainly the thing they need most is pork, maybe a little beans for November and December to kind of fill in gaps between South American old crop and South American new crop. But they may not need that much corn. So the market's kind of trading more right now emotion and weather than they are trading the fundamentals of demand. Later this week we get the USDA supply and demand report, and they've been consistently bearish. They should show more corn acres, less bean acres, and more corn carryout, and a slightly lower bean carryout. And the bean carryout both here and worldwide is still adequate. Not a lot of changes in the wheat numbers. So all in all, the market's trying to feel its way back to some of the season's highs because of weather. There's a lot of doubting Thomases out there that believe that the weather's going to be okay and that we don't really need to put a more weather premium onto it. So it'll be a battle between the managed funds, the momentum traders, and those that are bearish demand. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day.